So homeownership in America really booms after World War II because of federal policies like the GI Bill and the creation of the 30-year fixed-rate mortgage. Hello, suburbs and home equity. People always talk about real estate as a wealth engine in America, and it's really because of this 30-year fixed mortgage. In places like Canada, Europe, and Japan, banks hold mortgages on their own balance sheets. So if they hand out a 3% fixed loan for 30 years and inflation forces market rates up to, let's say, 7%, the bank is stuck losing money for 3 decades. 30-year fixed-rate mortgages are uniquely American because of government-sponsored securitization. That's a lot of big words. In a nutshell, our banks don't keep these mortgages on their books. They turn around and sell them in secondary markets, which frees them up to be able to make more home loans. Maybe you're asking yourself, does the 30-year fixed-rate mortgage still benefit me even with interest rates currently sitting in the mid-6% range, which feels super high compared to the early 2020s? Current mortgage rates are actually pretty average if you look at the last 50 years. And with the 30-year fixed-rate mortgage, if rates go up, you're protected with a fixed rate. And if they go down, you can refinance at a lower rate. Plus, you lock in the purchase price of a home now, versus when rates lower and spark another wave of buyer competition and home prices go higher. The 30-year fixed-rate mortgage is also a hedge against inflation, because you're locking in a fixed rate. And a dollar today is worth more than it will be in 30 years, because that's how inflation works. So while your monthly payment stays exactly the same 30 years from now, your wages will likely rise with inflation over the next few decades. So there you have it, the 30-year fixed-rate amortizing mortgage. It's as American as apple pie.